Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of a BTC, taking a look at what's been going on most recently with the price action, taking a look at some of the on-chain metrics to see what updates are going on there and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, then why not check it out? Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. It's the first place we go to notify you of everything that's going on in the crypto space. So why not check it out? Give a finger on the pulse of crypto by joining us in Discord. Let's get on with this though. Let's get into it. So Bitcoin paired up with USDT on the daily chart and Binance is the data source here. Now we're just going to start off by taking a look at this wick that occurred yesterday. Okay, you can kind of see it just pieced above our yellow dash line here at 21,467.93. Okay, so that actually does change some of the structures. Okay, so let's go and talk about that. Okay, so down here we can see that we have this structure here, right? Okay, we were kind of talking about maybe coming down into this 13,200, 13,900 approximately. I'm going to remove this because this one is now void, and we're going to mark this up, right? So as you can kind of see, we have this A, B, kind of C structure coming in down here. Okay, you can kind of see it right in there. If I get rid of the arrow. Okay, we then go up briefly just in here, 1, 2, and 3. Okay, or W, X, Y, and X, Z. Then over here, we come on down 1, 2, and 3. Okay, so we end up with this. Now, we can just make this really easy on ourselves and just say it's a stunted C wave. Should have gone down lower, but didn't. And that would be like this. Okay, we can kind of see it just like this coming in. So A, B, and C, or W, X, and Y. So then we start to move on up. And again, we have a very similar structure. We go up with A, down in B, and we are currently in a C. It's not impulsive. It's not a leading diagonal here. So we can't think of it as a 1, 2, 3, even though it does go past the 1.618. It's important that we actually consider the internal wave counts. So not a trend to the upside or anything like that, but just an ABC. Now we do have 5 waves at the end here. So 3, 3, 5 for regular flat. And you can kind of see that we are dancing around our 200 EMA just at the top here. Okay, so we just see that right there. So we crossed above this. We trying to turn it into a support line. It'll be interesting to see what happens there. It's not the first time we've crossed a 200 EMA like this. If we can't keep it, then do expect us to come down. We've done it once, twice, 3 times in this bear market. This would only be the 4th time, so we'll see if that sticks this time or not. I don't think it will personally, because we have to have a correction which will take us down lower anyway. So that is what it is. I'll go ahead and remove some of these. We don't need to kind of cloud up our charts anymore, so that's all good. Now, this being corrective to the upside is interesting, right? Because we kind of have this structure here. This is corrective. We haven't pierced above the next peak. Okay, this is the next key area, 25,211. Go past there, then I'm starting to get more confident in the space. Until then, this to me still looks like we go down to go up to come back down. Okay, so there's nothing terribly too unusual. We've got 3 waves here. We have 3 waves here. And it's possible that we even end with 5 waves coming down here. Okay, so we're just going to bear these things in mind. So at the moment, yeah, I would say it looks like we kind of have to do that. So let's go ahead and assume we're very, very close to the peak of where we're going, which I do think we are close to based on how much we are overbought on those macro timeframes now. I'll go ahead and assume that we'll probably push just a fraction higher. I'll leave it at 22 to keep conservative. It shows 13.5 towards $12,000. I'll mark this up with another yellow area right in here, and we'll see if that plays out. Okay, so we'll mark that and we'll kind of keep an eye on that there. Okay, overall, the structure is still very, very corrective. I would say W, X, Y, X, and Z coming down here possibly. It depends whether this is complete or not. To be on the scale of things, it looks like it probably needs to come down here to at least be a Z wave movement. Be interesting to kind of see. We are of course tracking this as lower highs and lower lows, which do break upwards. Okay, so they would break upwards, whereas all these other ones where the higher highs and higher lows break downwards, right? We speak about that all the time. So for there, that's quite an interesting one. Now we obviously, as I said, overbought on the stochastic RSI, remove the stochastic, throw the volume profiles in, and we now have bearish divergence here. Because we peaked above this line, we went up and set a higher high just here, Okay, but at the same time, our volumes are decreasing. So we know that that is bearish divergence in there. Now, we do also have bearish divergence on the RSI as well. We can see we come up into higher highs, and we can kind of see that right actually from over here and up to this area. And during this time, if I zoom out far enough, you can see that we come down into lower highs. Okay, so again, bearish divergence. On the smaller time frame, there's no bearish divergence, like right down here, but on the larger time frames there are. So if we zoom out further, we can see that this bearish divergence does exist. Okay, so kind of important that we don't just focus in on those smaller movements, and we focus in on kind of the bigger piece. Now, if I come to the weekly time frame, okay, again, we have a very similar situation. You can kind of see the ABC structure and where we're kind of thinking where this is going. Okay, and we can see that we're up in the overbought area. Okay, so again, not necessarily the best. And if we continue to climb up, then we do have bearish divergence from here. Okay, and over here. Okay, so just keep that in mind. For the most part, it's okay on the weekly. It's not terribly too bad. We're just looking for another correction, and that's not terribly too unusual. Again, if I bring up the RSI, it doesn't look too bad, but the stochastic RSI is more sensitive to the price movements. It looks like we've got plenty of room here on the RSI, but it's been the case pretty much from every single one of these kind of areas what we've been talking about in the past. Lots of people getting a bit too carried away with themselves. You can kind of see they draw trend lines here and say, look, we've broken out of it. It's fantastic. But actually they kind of ignore the underpinning values of what's going on actually outside of that stuff. Here you can see that basically there was a real good increase in volumes, okay, over here, okay, during those kind of June lows, and then we break on down. Volume continues to increase as we go down. As we've been pushing up here, volume has been decreasing. So really want to kind of just stress the fact that I don't know why people think that this is a bull market when it's vastly different data than what we were having in June, and June still crumbled down. Okay, so we're not getting those really right data sets to kind of be confident in the space. And again, if we continue to push up higher here with volume that is decreasing like this, bearish divergence even on our weekly time frame, we want to be aware of what this data is suggesting to us, and we don't want to kind of just be, thinking that things are going to be all fantastic and all that kind of stuff. Now, let's go ahead and take a look at the hourly chart before we jump into other things. I've seen some rather foolish stuff out there. So basically, we've seen some people who don't know the differences between bull flags and bear flags and all that kind of stuff. We had seen someone saying right in here, look, it's fantastic bull flag right in here. Bull flags go down, don't go up. Okay, so this is not, and like I said before, when we go into higher highs and higher lows, these break downwards, they do not break upwards. Okay, there is no bull flag here. A bull flag would actually be drawn the other way around. I'm going to use a parallel channel just to make it a little bit easier, right? A bull flag would be doing this. It would be going down into lower lows and lower highs, and they break upwards. Okay, so this here, to see people kind of saying and trying to trick people into buying right now because they say, oh, look, it's a bull flag, it's fantastic. We go, no, that's not a bull flag. So we want to kind of park that right there. This is a fifth wave ending diagonal structure, in my opinion, and we already hit the higher expectations yesterday with a wick, right? So this was 21,557 to 21,774. I'm not saying that we can't just peak up there again. That's definitely possible with these ending diagonals. They are not necessarily the easiest thing to kind of get tracking and all that kind of stuff. So just kind of bear that in mind. I'm not expecting terribly too much more here, and we can already see that within the stochastic RSI on this hourly chart. There isn't much volume, there is not much demand, okay? Essentially, it does not look overly great. So, I'm sat here telling you kind of, the facts as they are. It's up to you what you do with the data. Yeah, I'll leave that for you guys. Let's talk about, though, the on-chain metrics, okay? So here we have the inflows and the outflows, okay? And there is some positivity, right? And we can see this in terms of more outflows than inflows, right? So 31,000 leave the exchanges and 26,000 goes onto the exchanges. The question becomes where and who, right? Who is buying, who is selling, and where is it flowing to, right? If there's Bitcoin coming off the exchanges, where did it go, right? These are the things that we need to be asking ourselves. We can't just take it as face value that, okay, cool, we've had some outflows and we've had some inflows. Well, I want to know who's putting it onto the exchanges, and I want to know who's taking it off the exchanges. I want to know, are we talking retail investors or are we talking institutional whale investors? Who's moving the market here? Who is buying and who is selling? These are critically important pieces of data, in my opinion. So here we have the retail wallets, right? The krill, the shrimp, the dolphin, right? 0.1 BTC, over 1 BTC, and over 10 BTC, right? So we can see that these guys are actually kind of coming down, right? That these guys are starting to sell into this movement to the upside, which is kind of what I've been talking about, expecting to see for quite some time. This is something that I think is something that is a necessity, right? We cannot expect institutional players or billionaires and multimillionaires, whale players, to come in and buy up Bitcoin if there is no one selling it, right? Someone has to sell it to them. So considering that these big players have been selling, okay, during this entire bear market aggressively, right? And there's a slight uptick here. I'm starting to hope that maybe there's a bit of a change in pattern. But, essentially, that doesn't give me confidence, right? They've been selling it to the retail investors who have been buying it. And really what we want to do is we want to see the retail investors now sell it to the whale investors. Okay, so that's kind of how the flow of this is going to potentially work. So when we start seeing all of these guys starting to potentially dip down a little bit in their wallet counts, this gives me encouragement to think that maybe our whale players are starting to maybe participate and starting to buy up that Bitcoin from the retailers. This particular case here, there's no change day on day for the whale investors. There's a slight increase on the sharks, no change for the krakens. So it does look like the kind of smaller retail wallets aren't actually that much activity in the last few hours. We've seen some transfers from one Bitcoiner selling. We've got a little bit of an increase here on the krill side of things and a little bit of an increase on the dolphin side of things. But for the most part, I don't think any big major movements have actually occurred here, and it's quite minor stuff. So we are still waiting, slight increase on the shark side of things. We're still waiting to see more selling from retail, and we're looking for more buying from the whale investors. And the reason for this is that I can illustrate from 2018, that the retail investors buy every dip because they are told that it is the bottom. This is the same stuff that happens time and time again. The same stuff that we saw in June, the same stuff that we're seeing now. Okay, this was the bottom, this was the bottom, this was the bottom. By the time they get to this flat period over here, retail investors are so fed up of being lied to that they start selling, and they start to believe that actually it's all a scam, it's all a Ponzi scheme, it's not going anywhere. So they start selling. Now, during this flat period right here, okay, if I take a look at the whale wallets, this is exactly where the whales start buying. They're buying the Bitcoin from the retail investors, okay, and they're not buying or participating terribly too much. They're kind of moving the market around a little bit, but this is really where the bulk of the action comes. Once those retailers start selling their Bitcoin, there has to be a buyer, and the buyer here is the whales. Okay, then of course you've got the kraken. The kraken basically accumulates during the bear market and then floods the system right at the end there. You can see after this flat period, the initial kind of accumulation, they then flood the system with excess Bitcoin, dragging that price down, and then off to the bull market it goes. Now, I liken the Kraken size wallet to being basically cold storage for the whale players, because during this particular time, you can see right here how much more Bitcoin they soak up during that last little part of the dip. Right, and so I don't trust them, and it's important that we kind of monitor, in my opinion, anyway, my humble opinion, we monitor what goes on with where the Bitcoin is flowing. Okay, it's easy to say, oh, we've got fantastic outflows, or we've got great inflows, right, and bearish or bullish times. But if you don't fully understand who's buying, who's selling, and how there's always going to be a buyer and a seller, and you need to track where it's flowing to, then I don't know why you just look at a chart and draw a trend line. I think we have to consider the participants, right? This is why I like Elliott wave theory, because Elliott wave theory, it tracks people's behavior, the herd, right? How are the herd behaving? Are they all buying? Are they all selling as a majority, right? And that allows us to kind of track the behavior of people. And that's really important to me to understand from the psychology point of view, who is buying, who is selling, what is going to make them sell, and does that actually have a price, an impact on price, right? Because essentially supply and demand are the key metrics that move price, right? If there's little demand and excess supply, that price is going to absolutely tank, right? So we want to see, more demand, and we want to see a shrinkage of the supply if we want to be in a bullish times. And I don't think you're going to see that until there's a huge wealth transfer, because who's going to have the money to really push that market in a really big way? Well, those are the big institutional players, and of course the market makers and the billionaires and millionaires, right? And until they have a significant position, which they haven't got, all they've been doing is de-risking coming out, then why on earth would they be buying at a higher price? Who's going to push this price up higher? Retail hasn't got the demand behind it right now. There isn't that much retail money flowing out there. So we want to be really cautious. Okay. Now, not only do we have all those divergences on those macro timeframes, yes, we can still push up a little bit higher on the smaller timeframes, but I think people are getting a little bit too carried away thinking that we're in a bull market when there isn't enough data to suggest just this. I think there's some key levels that we do want to be watching out for, though, and I think there's numbers that I think are really important, right? For example, our 200 EMA, this is hovering around the $23,697 on the weekly chart. We do have a death cross looming between the 50 EMA and the 200 EMA. Okay, if these things do cross, that's going to be perceived negatively. It might be picked up by the media just at the right time to cause mass panic. Just keep an eye on these things and understand who also owns these mainstream media outlets and so forth. I think ultimately, though, we're going to have a correction, whether that means new lower lows or not. That's still up for grabs and still up for debate. But for now, I do think we should be prepared for some kind of corrective action. I'm going to leave this video right there, though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. Don't forget to join us down in Discord. And guys, if you're looking for more information on risk management, how to build a portfolio, or even Elliott Wave theory, check out 𝗕𝗘𝗪𝗀𝗪𝗀𝗀 linked below. We're running 50% off on the courses at the moment, so check it out. Guys, until the next one, have a fantastic day.